What up with the wheelhouse, baby? You ready to hit it? You ready to get it? You ready to level up and get with it? Well, it is time to charge those batteries and get that money printer out because we are headed to the moon to stack chips and get paid out. Now, on this channel, no baby stepping, no line stepping, no loose talk, no second thoughts, and definitely no maybes. And like I always say, green lights to the beach, baby. Now look, if you haven't been on this channel, hit the subscribe, hit the select all, like the video, make me a comment, and I'm gonna hook you up. I hooked you up in the last video with a course style tutorial video and the one before that. I want you guys to learn from these videos. I'm teaching you guys some really cool stuff. And then if you like what you hear and you're learning from it, you can join, you can become a Jedi or a Padawan and get my trade alerts or courses and trade alerts. And you can do that in the Discord. And I have the link in the description below of this video. It's free to come in there. You just come in for free. You can chat with me. You can chat with everybody else. If you're interested in the courses, just go to the Start Here button. And then there's subscriptions in there. I'm still doing the 50% off the annual. So if you do the Jedi annual, just type in Santa, S-A-N-T-A, lowercase, and it'll take off. Normally it's $99 a month, so about $1,200 a year, and it'll take off about half of that if you decide to do it. Now we are doing the Jedi Compound Challenge. We have a bunch of people in the Discord. That is also free to you. I give you $1 million. It's a simulator. It's not real money, you know, we're using the methods that I'm teaching, although not everybody's using the methods, apparently. Some people are just yellowing it, and then, but they're going to realize pretty soon that they're going to lose their money and they will be disqualified from the competition because putting everything on Tesla on one day to find out that you lose almost all of it the next day, I mean, I could have told you that was going to happen. So, you know, you want to use the systems, you want to use the methods, and you definitely want to, you know, do it a specific way because I already know something. I already know about all this kind of stuff. And I know what will happen, you know, 9.9 out of 10 times. So, yeah, you know, you could do it. It's free. You can do the simulator. It takes you 5 minutes to set up and sign up, and then you could be trading literally today. You start with $1 million. You can go long. You can go short. I actually have it set up, you know, real, like you have interest on your margin. I have all that stuff set up in there for you. It goes for all of 2022. And we're just a couple days in. So just click the link in the Discord. Get in there in the Discord. It's free. And then go to announcements and you can see how to set up the simulator for yourself. And like I said, it's all totally free. And then if you want to upgrade, just go to the Start Here and go to subscriptions. All right. So I didn't make a video yesterday because my poor little dog, my little teddy bear, Mr. Capone, a.k.a. the meatball, he, well, basically I got him a new hip and a new leg for Christmas. I know, it sounds crazy, but I'm not kidding. We had to literally get a surgeon, a special surgeon, and he had one of his pelvic bones was like pointy, like it's supposed to be rounded and smooth, and one was pointy, so we had to like shave that down because he was in pain, and he had a ruptured ACL, torn ligaments, and he had a torn meniscus. And so we had to put plates and bolts and screws all in his legs, and then from the anesthesia and all the medication, he was sick from both ends. So I had some personal stuff going on. I actually slept on the couch next to him so that, you know, in case he got scared and didn't know where he was, because normally he sleeps on the 3rd floor with me, but I couldn't, you know, he's 100 pounds. I mean, the dude is a tank. And yeah, so I don't want to hurt him. I don't want to move him. So I didn't make a video yesterday. I apologize, just personal stuff, but I am going to make one for you. And today what I'm going to do is I'm just going to give you kind of a brief overview on, you know, shorting or, you know, trading the direction to a downward downside. And just a very simple way to look at it. And, you know, I'm not going to overcomplicate it. I'm just going to keep it pretty simple for you. I have after every day in the market and on weekends, I work. I do post market prep. I'm constantly organizing my watch list, working on charts, preparing for the next day, and always watching everything. That's just part of being a trader. I actually enjoy it. It's not a problem for me. I'm not complaining, but that's what I've been doing for the last couple hours, and I have put together a couple things. So these are like my good ones. A lot of these I'm already messing with, and then I made this one which is called Premium Shorts. Now these charts right here are for the most part, we'll click through them, but for the most part they're primed to go short. I mean, you can make money. You want to go long, you buy something, you hope it goes up, and you make that. You want to go down, and it goes down, you make money there. So, to go short, what you're doing is you're asking your brokerage to borrow shares, okay? And they have a huge catalog. They have mutual funds. They have shares that they can lend you. Now, you need a margin account to do that because they're going to collateralize your equity or your cash against the borrowed shares that you're shorted. And I kind of want to go through this because I'm not exactly sure what's going to happen in 2022, but it's always good to be prepared. And I go long and short all the time, and it doesn't bother me at all. It's simple. Like, it's completely fine. I have a system for it. I like doing it. I prefer going long, definitely, but I have no problem going short if the setup is correct. And I'm going to show you just a simple way to identify setups and the prime spot to take it short. I can get pretty technical with you on this stuff, but I'm not going to. You can go through the courses for that. But I just want to give you guys an overview on YouTube and just kind of help out a little bit. So let's just take a look at a couple here. So okay, let's see. So what you're looking for when you go short, and just so you know, I only put 3 EMAs on the charts today, okay? And for crypto, I have it a little bit different, and I'll explain that maybe later. Okay, so the purple one is your 200, the blue one's your 50, and the green one is your 9, okay? And so if you notice, as the purple one goes up, that's, it's going up, and so is the price action, which is the bright green over here. And it shows the trend, right? And then it comes down and it's showing a downtrend. Well, the same with the 50 EMA, it lags 50 days, and the same with the 9. I just wanted to put these 3 on. I could put a 30, I could put a 100, I could put a 20, but it's very simple to just put these 3 on, and I'll show you why. Now, okay, this is, okay, I'm on the daily. It's best to be on the daily. You can, I do it a lot on the hourly, but you can do it on the daily would be much more recommended, especially if you've never gone short or you're a beginner trader. Even intermediate trader, maybe the daily is best. You can, you can get your butt handed to you if you're not careful and you don't know what you're doing with this. So, and I'm not trying to intimidate you because it's really not that hard. Again, I know I preach to the choir, right? If you have a system, if you follow rules and you're just disciplined, like robotic, hey, when this happens, I do that. When this happens, I do this, like kind of thing. So this is Clean Spark. It's obviously trending down. You can see in the bright green line right here. Okay, you can see it's trending down in the bright blue line, and you can see that it's trending down in the purple line, right? It's coming down. Okay, you can also see in the price action, it's coming down. It had a rally attempt, but essentially it's coming down, right? Well, when the price action falls below the 9, that doesn't mean that you should go short right there. Sometimes I do it, but it's not like preferred to do that, and it's probably not even that smart to do, to be honest, unless specific conditions are met. Now, the first thing when going short, I always, or almost always when I'm going long up here, let's say, I wanted to be in above all 3 of these, and I bought in right there where it was red, the red price action, at 15.59, but my condition to get out was on the green line at 20.93. So I made $5, okay? But I, no matter what, get out when it goes through this green line. In fact, in Webull, which the link to Webull, you get, right now they're giving out away Apple and Amazon on my account. They hit me up. They're doing fractional shares of Amazon, and they're doing full shares of Apple right now, up to $2,300 with the link in the description right now, which is super sick. So, okay, so I always know when I'm going long, I'm just going to get out at the 9. I'm not going to wait for the 20, the 30, the 50. Sure, there's nothing wrong with that. That's a great way to get out at the 50, no problem. But I'd rather make like 1,400 8 times than just go up and down. And the reason why is because time is money. And every bit of time that I have in the market, I am trying to make money while the markets are open. So I don't want to waste time and deal with all the downs, all the stuff coming all the way down to the 50 and lose $50 here, or $30 or whatever that number is. I'd rather just like have a rule to get in, catch the meat of the move, and then get out. And like, if the purple and blue one were below, and many charts are like that, maybe not in this list, but in my normal long list, you get in here at 1168, and you would have got out at 2091. Basically, just call it 12 and 21. So you made $9. $9, simple. Okay, but as soon as it goes under, you get out of your long. That doesn't mean that you need to go short right there, though. Okay, because you're going to come and you're going to hit the 20, and if it breaks through there, well, the chances and the odds of it going further down is better. But the 50 is a pretty major support, and a lot of times these bounce off the 50. So I personally don't really like to go short until it goes not only through the 9, the 20, the 30, the 50. Once it breaks the 50, I'm starting to feel more comfortable. But when it gets through that 200, game on. So now you notice how the price action came up and was rejected. Tried, didn't make it, rejected. So it stayed under the 9, okay? Here it's above the 9. Here it's under the 9. Okay, so now you're out. You took your $9, okay? In, out, $9. Now it's just in your watch list. You're just waiting. You're watching it go down, but you're not taking the damage like all these other knuckleheads that are bag holding. You're just like, I'm just out with all my money ready to go. So all you're doing is waiting in the watch list for it to drop through all these EMAs. And if it doesn't and it bounces, well, then that might be a time that you get back in and you set a stop under it. But and look for a trend reversal and things like that. But again, I'm not going to overcomplicate things. Let's just talk about shorting. So you went long, you got out, you want it to bust through all these EMAs, and when it gets through the 200, it's pretty much game on. So you go short, okay? Let's say you buy 100 shares right here at 1633. Well, if you would have bought 100 shares there at 1633, it would be 16,330, right? And and then you're still in. You're basically still in, and you basically are. Just round that up to 10. Just call it $6-7. You're already up $7. Okay, so that's cool. You made $700, and you don't literally need to get out. If you go out, if you go short at the 200, you legitimately can do it a few different ways, okay? You don't have to get back in until this red crosses the 200, which could take a while. There's a better way. You could, if you go short here, when it crosses the 200, you could do it when the price action, the red, crosses the 50. That's better. That's better on a lot of charts. That's better. Or you could play it really tight and just only enter when you cross the 200, but only exit when you cross the 9. So right here you cross, maybe you got out, and then you were like, oh, fake out, boom, and you just bought back in short, and you're just waiting, and it could go down another $3-4. So you use the EMAs to your advantage. I use the 9 a lot. The 9 is like my favorite. I don't know. All of them are super important, but the 9 really helps me for the way I do things. Because I'm very tight and I'm like laser focused, like ninja style. I have no problem getting in and out like 20 times in one day. Like I don't care. Like I'm bam, 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 bam. Like I'm fast with it. But the way that I do things, it's over time, it amasses and it minimizes my damage. And I don't do these huge YOLO like boom, 50 racks on one hit, because I also don't risk all my money like that. It's just not wise to do that. I get it in a simulator, with play money, but like when you have real millions of dollars, you just wouldn't do that. You just don't do that. It's just, unless you have like 20 or 30 of them, and then maybe you could put 1 million on something, but you don't really like do that, like all in on one and have 1 million. You just don't do that. It's just not smart. You get really wrecked really fast that way. So I like to do it in a system. I like to have specific blocks of shares, position size, a strategy for in and out, and certain conditions to go long, certain conditions to go short, and then on whether I'm going short or long, they both have entries and exit rules. So for me to go long, I like to do something like this. I'll give you an example here. Here's an example. I bought this today. I'm already up like $1,800. Okay, so here's an example. The 200 is below you, the 50 is below you, the 9 is below you, and you've pierced the 9. Now, as long as you're staying above the 9, you're making money. And then when it crosses the 9, see how that's got this little green thing right here? I just move my stop to there every day. And every day at the end of the day, I just move my stop right there, and it just goes and goes and goes. And, sometimes they go like, look at this one. This one went from 75.90, and you never got out until 109.70. So what is that? 75 and I'm sorry, I lost it. Sorry, $75 to what did I say? 109? Yeah, I call it 110. Okay, so what is that? $35. Okay, that's $35 a share. Like what are we doing here? Like, come on, I'm like making this so freaking simple. So guess what? You wait and you wait and wait, and there it is again. It just happened again. Boom. So you buy in at 107, you're already at 119, and this thing could go on for 3 weeks. That's my rule. The 200 has to be below, the 50 has to be below, the 9 has to be below, and it's best when it first comes up through the 9. Sometimes it'll come up and fake you out, and that's why you have a stop. Very low risk, high reward. But this is showing that you're in an overall uptrend. This is showing you're in an overall uptrend. And if you throw in a little dabble-do-ya and you throw in maybe a leader of the sector with some good earnings and some goodies, boom, dabble-do-ya, like I do ya. And maybe you get a little reverse head and shoulders, and boom, 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 you understand some technicals, and off to the races. So that's my conditions for entries and exits for like quick plays. And sometimes I don't even do it on the daily. Sometimes I just back that stuff right on up to the hourly, and I'm doing the same thing. I'm like, boom, on this hour, if this is below and this is below, I'm in, boom. And let's see what I bought it at. 108.22, I'm at 119.20, and I'm on the hourly. And when it crosses this number, 118.59, I'll get out. And then let's go look at, so it says 118.59 for my stop on the hourly. Let's see if it's the same on the daily. It's not. It's 110.53. So it's much looser on the daily. It's much tighter on the hourly. So I tend to do everything on the hourly, personally. So I have an entry rule, I have an exit rule, I have conditions that have to be met. I have multiple other conditions that are bonuses, like a reverse head and shoulders and a leader and, huge earnings beats and, all kinds of things that I look for as well. Institutional support, as an example, good products, services, management. And the list goes on and on. I got all kinds of things I like personally. And I also have all kinds of things I don't like. But the same thing applies, okay? You have to find out who you are. I know who I am. I know my rules. I know my conditions. I know how to make money in the stock market and the crypto market because I have the system and I just robotically have this whole huge watch list. Now, let me just show you a couple things. Okay, what did I say? If the 200 is below you, the 50 is below you, the 9 is below you, and it pierces the 9, that's the time to get in, right? Okay, let's just check. Boom. Below, 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 and running. Boom. 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 Who loves you, baby? I'm just trying to show you guys how to do it, baby. You know what I'm saying? Like, you can be like trying to figure it out your whole life, and you can be, oh, I gotta do this out of, and I gotta figure out in the news what's going on, and because this is happening and that is happening, that must be the reason. No, man, just make sure this line is below you, this line is below you, this line is below you, and this line is coming up, and and make sure when you enter that you just, you put a little stop down here, and there's ways to, you want to do that correctly so you don't get wicked out, because this is a line chart, of course. And, and just, every day move your stop here, maybe even a little bit below it. But, I mean, this is what I'm talking about. These are like my longs, like, notice how they all look. Oh, not that one. It's this one. Oh, what the hell is Hut Money doing in there? Oh, because it's going through a reverse 9. That's for another video. That's a different video. We'll talk about that later. But boom. Look at this stuff. Look at that. That's how you make money, guys. Okay? Come on. It's time to take the training wheels off and get paid. Now, let's go see what some ugly charts look like. Remember, we got conditions. So if we're going long, we got the 200 below us, the 50 below us, the 9 below us, the price action above, right? Well, we want the opposite for shorts. So let's go look. Okay. Now, instead of the purple, the blue, and the green being below, we want those above. And are they? Yeah. The purple's above us. The green's above us. The 50's above us. When you cross that purple, you're gone, dude. You don't want to be in this list and be holding it. Actually, let me read some off to save you guys in case you are. Clean Spark, get out of it. Coinbase, get out of it. ARCX, run. Moderna, get out. ARCQ, well, ARCQ could bounce off the reverse 9, but be careful. You're literally at the brink of extinction. No, this one has not, here's a good example. This one has not crossed the purple. Therefore, it does not meet all my conditions. Therefore, I would not short Regeneron Farms. I personally would not do it just because it's below this, because it needs to be below all three to meet my conditions, even though everything shows me the sucker's about to come down, including the volume and all this stuff. But I like high probability and high chances and high odds of things, and I've done it all. I've tried it coming down. It's just best to do it when you're in a downtrend, which starts right here essentially. There's other ways to look at downtrends too. I mean, necklines and pivot lows and things like that. But let's just keep it simple and use the 200 as a line in the sand. If you're above the purple, you're bullish. If you're below, you're bearish. Amazon. Amazon just crossed the purple. Lululemon. Don't be in Lululemon right now. Williams and Sonoma, short. Walmart, fake out, going down. Palantir, already down. But look, what if you shorted right here at 23.45 and you're already up $5 on a short? Sam Boston Beer, look, it tried to rally and then it kind of came down below. We'll see what happens. Zoom Video, that's a short. Decker's Outdoor, that's a short. Apps, it's on the brink right there. It's just going through that reverse 9. CRM Salesforce, that's a short. M-Phase, that's a short. You don't want to be in M-Phase. DVAX, DVAX is above the purple, sorry. Getting close to a big problem though. Quest Diagnostics, no, that is different, okay? Quest Diagnostics is, yes, below the 9, but it's come to the 50, and it's in an uptrend, okay? If you remember all my blue ribbons, this thing has blue ribbons. So, no, you don't short this one. It's dangerous. It's more dangerous to short this in an uptrend. Better to do it when you meet all the conditions and you're below all of them. Teladoc. Teladoc is a short. You don't want to be going long in Teladoc. I can put it in here. AMC, it's not looking healthy. Asana, short. Monday.com. See how it's really close to 200? Very close. We'll have to see what happens. SoFi, it's under all three. DraftKings, under all three. In fact, look at DraftKings. DraftKings, remember how I told you when you're under the 9 Sometimes they'll bounce up and try, bounce up and try, bounce up and try, bounce up. Look, it bounced up and failed. That means it's coming down further. Service now. Not below all three, but it's getting close. I just took a whole, like everything that looked kind of dirty and put it in here. I'm not saying that I'm shorting any of these. I'm just saying that this is what a chart would look like and how you would enter a short if you wanted to. And I just found all the ones that looked kind of bad and then put them in this list for you. ARC F, same thing. See how it came up, it tried, and it had a rally temp and failed, and rally temp and failed. Like, but it's below all three. That's a short. Etsy. Etsy is a short. Zoom Info Technologies, perfect short. Just came below the 200. And 8.35 million shares were sold today by institutions. Who loves you? I might short that tomorrow, actually. ARK, dirty as it can go. Roku. Roku failed. It failed and it's down. CrowdStrike, it's a short. Square, it's a short. ARKG, it's a short. InMode. InMode is right on the brink. Now, I told you 3 times. I don't like doing it until it goes below and I see that little one. Notice how this one, which one was it? Was it Roku? No. It was Zoom. See how it just barely went through right there? That's good, okay? But this one right here, this is like, you got to be careful. See how it's above? Well, when I say be careful, it's because institutions and algorithms are set to like protect right there and buy. So you could think, oh, I'm going to get in early and short, and then boom, that thing can rally. And that's why I like to make sure it comes down and maybe even confirms and then goes. It's okay to do that, like, you know, stuff like that. Playboy. I don't know how this happened, but Playboy turned into a short. In fact, it's telling me that thing's about to come down further. Chewy rally attempt, didn't make it. Upstart. If you're in Upstart long right now, you need to get out, like cut your losses. That thing's coming down. JD.com. JD.com is coming down hard and much further. In fact, I know it seems like it's come down a lot, but the indicators are telling me that it is just literally getting started. So, bad. Unity. Oh, Unity just came through the purple. It came down, it bounced, it fought, it rallied, it a couple times, it failed, and now it just came down. And look at this. Unity. Go short. Dash. I was talking about doing Dash like a month and a half ago. Back up here. If I would have done it right here, see what I mean? How it came down, retested, then fell? That's exactly what I'm talking about. So 187, and it's at 135. I'd be up $50 a share if I just shorted when I wanted to, but I didn't do it. Pubmatic. Here's a brand new one. I was actually going to go long the other day when I saw this happening. I was getting ready to buy it to go long because of my long conditions. It pierced all three in the right directions, and before I could even get in, it started falling, and I luckily didn't take the trade, and now it fell so hard, it's actually a short. It's crazy. This one, I am in a short, actually, because it has it's $565 a share, and it's going to come down hardcore. Like, every day, this thing will rally at the end of the day, $20 or whatever it is, but in the morning, like it's already up $6.10 in the after hours. But let me just tell you something. These things, when they're in a downtrend and it's this severe, it's coming down further. Don't worry. Don't worry about it. I mean, worst case scenario, it only comes down to 551. But I mean, it could definitely come down to 473. So that's a short. You know, these things make mountains, and then they come down the mountain, just like I teach you in the courses, you know. It is quite oversold, though. I will say that. I think it's pretty oversold. Oh, man, this Weeble. So, you guys understand what I'm saying. I just wanted to show you guys, you know, boom, rally temp fell. Under that 9, these EMAs are supports and resistances. Under that 200, all conditions are met. This is net Cloudflare. Although today it had almost 3.1 million shares were purchased. So that's literally somebody buying the dip. or adding to their position. But yeah, basically 3.1 million shares were purchased today on that. But this has so much downward pressure, it didn't even help. In fact, it went down $11.20 today, 8.88%. That's crazy. Now, here's the big one. If you're in this, you need to run. You need to get out. Like what are you doing? You obviously know nothing about technical analysis if you're in this, because this is really, really the ugliest one of all. It's called Affirm. Although Affirm did have, 19.45 million shares were bought. This thing could be coming to a head right around this line is what I'm predicting, 71.55. But this thing, this steepness of this and this angle right here, this is bad, guys. This is bad. This thing came all the way up the mountain, and all the way down the mountain. And look at that 9 is literally resistance, fake out. Resistance, fake out, drop. And look how far it is getting from the 9 now. So now when it comes back, it's going to have to come out pretty far. This one's bad. I don't know why this thing got hit so hard, to be honest. I mean, I don't even know if there's a reason. I just think that literally right now there's what I see, like honestly, what I'm seeing is just like a systematic, like in the charts, on the candles, I'm seeing very systematic algo trading is what I'm seeing. I'm seeing on crypto and stocks, when you see one green candle, you see on the minutes, you see a green candle, and then you see it on thousands of charts. I can't look at thousands, but I can look at hundreds. And then, even on crypto, like when you go, so it's like algo trading. And I just feel like a lot of stuff is being bought and sold and rotated via like computers right now. It just feels that way. I've been doing this a long time, and I'm like really like, I watch the minute charts on all kinds of screens with multiple screens on the screens, and that's just what I'm seeing, I mean, there's a little bit of news today too. I mean, the manufacturing data was not good. It came in low. There's also some like policy data that's come out that has to do with maybe they're not going to raise rates as quickly, but they're going to. I got to read up on it a little bit more. It has to do with basically like backstopping the flow of money by the use of bonds. And I haven't read too far into it. It's kind of like one of those things I need to read tonight, but maybe I'll make a video on that tomorrow, actually, once I dig into it and see. But from what I get, what they're thinking about doing, and honestly, this is the deal. If they raise rates, the market will crash. I'm just going to tell you. Like, I'm not going to sugarcoat it. I'm not going to BS you. Like, it just is what's going to happen, okay? Like, I know this stuff, okay? It's just what has happened historically every time. And if they raise it like more than 3 times in 1 year, it's going to happen. It's probably going to be the end of a bull run. It's going to be a bear run, and most likely a recession, period. But here's the thing. These Democrats don't want to lose the position. And another thing that I know is, well, everybody knows the midterms are coming up, right? But another thing I know is that not only when they raise rates does it crash the market or become the beginning of a bear run, which, by the way, I think it's already started like months ago. And that's why I'm doing a video for you to short. So this is actually why I'm doing this video, is to kind of show you and teach you and prepare you. That's why I did the video on recessions. You should go watch that. It's got tons of historical facts in there. That's why I've been teaching. Like, I've been doing like course style videos on YouTube. I've been doing it for you. And all I literally ask for is for you to like literally like the video, make a comment for me, and then go in the Discord and just talk to people, hang out, do some charting and get to know us, and that's all, and it's fun, it's cool, so you can learn a lot. I can teach you guys a lot of stuff. But yeah, I mean, with the midterms coming up, when there's a stock market crash, a recession, violent rate hikes that freak out markets during an election or midterm, election basically, it's very, very bad for the incumbent. Very, very bad. And it's also going to help the new guy that's running against them, because he's not to blame at the moment, right? He will be to blame later. He's not to be the blame yet. And Biden's going to know this. His administration's going to know this. I mean, this is, yes, it's factual. Yes, it's historical. Yes, I could show you 3-4 books that I've read that have this information in it, and it's happened just about every time. But you can just use common sense. And from what I'm telling you, they raise rates, markets crash, always happens. Okay, I can give you the years. I can spit off all kinds of information about all kinds of things, but I have already in other videos. Also, when they do that and they crash the market and start a recession, it's going to be hard for the guy to get reelected. People are going to be really pissed. They're already pissed about inflation, and it's not completely this administration's fault about inflation. I mean, this COVID, this pandemic. There was emergency use of funds, even from the previous administration. So it's not one person or one administration to blame. Like, things had to be fixed. And I knew with that stuff going on, printing all that money, there would be inflation and there would be problems. And I also knew there'd be an inflated stock market and an inflated real estate market. And I capitalized on both. But I'm also smart enough to know that it's going to come down. And I'm prepared and ready for that. And that's why I'm showing you this video of how to take a market down. So I don't know. They said they're going to raise the rates. Now they're coming out with something saying that they're, maybe going to not, they're going to, take some of the money back. And I need to read this. I don't know if they're just taking it back. They're going to burn the money or I think they're going to do something with bonds. I don't know everything yet. Maybe I'll do a video on that tomorrow. I want to read it thoroughly because I can't just read a headline and know everything that they're thinking. But yeah, I mean, it's crazy if they raise the rates really fast, but you guys got to be prepared for a recession or a crash if they do. And just know that is like the number one thing, the discount rate and funds rate when that changes, that has caused the tops and beginning of bear runs and most of the time recessions. Over the last 100 years, or 13 recessions, or 29 bear markets. I know all about this stuff. I'm like a historian when it comes to stock markets and charts. So anyways, listen, this is how you short, have conditions, have rules for entries and exits. You do it the opposite. Remember, you need a margin count. You're borrowing shares. You definitely need to understand stop losses, position sizing, capital protection, and you need to understand that the leverage could be different on shorting than it is on normal margin longs. So I'm going to leave it there. If you want to learn more, get in the Discord, start chatting with me and everybody else. If you want to upgrade, just go to the start here in the Discord and go to subscriptions and use Santa, S-A-N-T-A, and you get half off of the annual. Thank you for watching. I appreciate you. My name's Chris, if you didn't know, and welcome to the Wheelhouse.